Morning, everyone. I'm Sushmita, Business Development Intern here in the Atal Incubation Center. Welcome to today's webinar hosted by the Atal Incubation Center, Center Coffee Research Institute, Center for Entrepreneurship Development, a technology business incubator established at the Coffee Board's head office in Bangalore. This initiative, in collaboration with the Center Coffee Research Institute and the
Voice is not clear. Not able to hear.
Is it clear, ma?
Yes.
Hello.
Yeah, it's clear.
Yes.
It's clear. Yeah.
This initiative, in collaboration with the Central Coffee Research Institute and the Atal Innovation Mission, is dedicated to supporting and nurturing startups in the coffee sector. At AIC-CCRI-CED, we offer a range of facilities and services designed to accelerate the growth of initiatives like coffee-related ventures. Our resources include state-of-the-art laboratories, mentorship programs, funding opportunities, and access to industry experts. Today's session is part of our market access webinar series, which helps startups navigate market entry and sustainability challenges. Through this series, we provide valuable insights into upcoming events, exhibitions, and capacity building programs. To deliver this webinar, we have here with us today Ms. AIC-CCRI-CED, founder of Tax Consultants, Mr. H.K. Vinay Karlagiri, partner at TaxWise Consultants, and Mr. Akshay Raj Arjain. Ms. AIC-CCRI-CED is a seasoned professional with over 20 years of experience in finance, operational management, and HR. Holding an MCOM degree, she has worked extensively in tax planning.
Sorry, it's not at all audible. It's very bad.
Can somebody else confirm it is the same for all of them, or?
Ma'am, not audible. Your voice is breaking.
And you have to go a little bit slower.
One second.
The audio is too weak.
Hello. Ma'am, is it audible?
Yeah, it's audible now.
Yes, sir. Ms. AIC-CCRI-CED is a seasoned professional with over 20 years of experience in finance, operation management, and HR. Holding an MCOM degree, she has worked extensively in tax planning, compliance, and financial consulting across various industries. An experienced speaker and trainer, she conducts workshops and webinars on taxation, GST, and financial management. Mr. Vinay Karlagiri is a qualified chartered accountant with expertise in taxation, auditing, private equity investments, and regulatory compliance. He has worked with companies, firms, trusts, and individuals, ensuring adherence to income tax laws and financial regulations. He also holds a post-graduation degree in investment and tax finance from the University of Westminster, London, further strengthening his expertise in risk assessment and financial strategy. Mr. Akshay Raj Arjain is an associate chartered accountant with experience in tax auditing and accounting. Having worked with Big Four firms and multinational corporations, he specializes in income tax matters, statutory audits, and regulatory compliance for various entities. We are excited to have them share their insights with us today. We welcome you all on behalf of Atal Incubation Center Coffee Board. Over to you, sir.
Hey, hi. Thank you so much. It was a great thing. Hi all. A very happy morning. This is CA Vinay, and along with my side I have Shabri and Akshay Arjain. We will keep it very simple. We want it to be more on a Q&A basis, where we want you guys to ask the questions based upon your difficulties, what you guys are facing. And we will morely concentrated on GST and income tax and few of the budget glimpse of how is it benefiting startups. So we won't waste much time. I'll hand over to Akshay, where he'll be guiding you, and he'll be explaining more on income tax and GST and budget. So let's keep it more interactive session, wherein where you guys come up with the questions and we will be asking questions, so that it will be more interesting rather than giving a presentation. It should be, we request you guys to unmute or on your cameras so that let's make it a more interactive and a more energetic session.
We
All out
we
on
can't
stage.
see you. We can't see you, Vinay.
One sec.
Okay, thank you.
So
Only
the
now.
thing is
Only
like,
now.
yeah, yes, definitely. I'll keep my camera on for surely. Just because I was traveling, that's why I was off it. But yeah, I'll pass on. I won't waste much time. I'll pass on to Akshay, where he'll be taking us through it. Keep it more interactive. Let's discuss together and let's talk together. Take care. All out, Akshay.
Yeah, good morning, everyone. I hope you all had a great weekend and happy Yugadi belated wishes. So yeah, I'll like to share my screen right now and let me take you through the PowerPoint presentation. Is my screen visible?
Yes, Akshay. I request everyone to please at least tell us.
Yes.
Sure.
Yeah, it's visible.
Yeah.
Yes.
So in today's presentation, this is our index. We will be going through a few of the key points. What are the benefits for startup from budget 2025? What is the best structure for the startup and why? A glimpse of income tax and its exemption for startup, and a glimpse of GST. First of all, we have divided the benefits which has been given in the budget 2025 into two parts. That's for startup and MSME. I guess most of you might have been confused that many of them think that MSME, startup are MSME and all the MSME are startup. Let me clarify with that. Let me clarify that doubt with a case study. See, I'm from a brief introduction about me. I'm from Chikmagaluru. So whenever I say people that I'm from Chikmagaluru, three questions they'll ask: Are you a coffee planter or are you a coffee trader? And how happy you are this year because of shoot up in coffee price. So yeah, so let me take a case study. If a coffee trader, if a coffee planter comes up with the idea to trade the coffee seeds which has been grown by him into local market, which is already an established industry, then he can be classified as a MSME. So basically, MSME is a starting a business in already established industry. And startup is something where you will also start a business in established industry with the innovative mindset. For example, I'll start a business in the coffee trading industry, but I'll sell my coffee beans through online platform. That's through online platform I start doing export to the other countries. That's where we can classify my enterprise as a startup. So basically, we have classified the benefits which has been given in 2025 budget for startup and for MSME. So for the first point is for startup, there has been an extended tax benefit. So this point I'll be explaining more detailed manner when I'm explaining you the glimpse of tax exemptions which is there. And second one is the enhanced credit guarantee. So what happens is when the startup is in the ideation stage where when the promoter has come up with the idea and he has to make that idea to work, he needs to have some capital, and that we can get it from a bootstrapping. Bootstrapping in a sense, using all the personal resources, whatever he has, to start to get the idea working on. So on the second stage, that is the pre-seed stage, a startup need to do some production activities where they have to come up with the idea how to manufacture the product, how to do the marketing for the product. At this stage, there might be requiring of some funds where the venture capitalists will not be ready to invest because the product has not come up into the market yet. So what they'll do, they'll go for a banking loan. They'll go to the bank for asking for a loan. And you might be knowing that our Indian banking system is quite strict when it comes to giving of a loan and very lenient when it comes to accepting a deposit. So while giving a loan, they will ask for a collateral guarantee. And most of the startups who have started with a scratch might not be having a proper guarantee to to take that loan. So they'll face a major issue while getting the loan approval from the bank. So what government has come up with a scheme called collateral guarantee, which has been given by a government on behalf of startups. So government has come up with a trust called credit guarantee for startup as well as for MSME. It's a trust fund is called Credit Guarantee Fund Trust for Micro and Small Enterprises. through which government will give the guarantee on behalf of a startup as well as for MSME. And this year, the government has started increasing the credit guarantee limit. For example, earlier they used to give the guarantee for the startup up to 10 crores of loan. Now they have increased to 20 crores. So any startup who is looking for a loan from a bank, they can get the collateral from the government up to 20 crores rupees of loan. And third is the additional funds of funds. Before explaining this point, I want you to know what is the meaning of fund of funds. Fund of funds is a investment fund that pools the investments from the investors and invest in a multiple other funds rather than directly in shares or debentures or any other segments of investment. What they'll do, they'll pool the funds from the investors. That funds will be invested in another fund. That fund will directly invest in other segments of investments. So government has come up with a fund of fund for startup. So what the government is doing through Small Industrial Development Bank of India, they have been funding the startup funds, which is funding the venture capitalists to directly invest in startup, which has been doing well in India. So government has infused 10,000 crores to this fund of fund, through which the Small Development Bank of India will fund to the venture capitalist, where the venture capitalists will directly invest to the startups. They have introduced this fund of funds, which was earlier also, and they have increased the limit to 10,000 crores. Well, coming to the MSME, there's a revised classification criteria.
So what will be the interest rate for this kind of loans?
Yeah, that will be answered in the Q&A. So because based on the MSME scheme, there are three types of loan called Shishu loan and the Kishore loan. And one more loan. Based on that, the interest rate will be classified. That will be, you can ask the question at the end so that you can also answer. There are few classification criteria to get the loan from the bank. So yeah, we'll be explaining you in detail about that. Is that fine?
Sure, thank you.
Sure. So yeah, so there is for MSME, the revised classification criteria, the enhanced credit access, micro enterprises, credit cards, and the timely payments. So what they have come up with is the revised classification criteria. So earlier, to classify the industry into MSME, the government has come up with two criteria, that is investment criteria and the turnover criteria. For example, if a small enterprises, in order to get classified as in any industry, in order to get classified as a small enterprises, the investment was 10 crore. If the investment is up to 10 crore in the plant and machinery, and the turnover is up to 50 crore, then it would be considered as a small enterprises. So earlier, what used to happen is any small enterprise, for example, I'll come up with a case study for this to explain it even more better. For example, there's an engineering limited company called ABC Engineering Private Limited Company, which is classified as a small enterprises, and they want to expand which has invested in the plant and machinery up to 9 crores, and which has a turnover up to 48 crores. Now it wants to expand its business, but it's scared of getting lost of all the benefits which it used to get before. When it was recognized as small enterprises. So what was hindering all the small enterprises was converting into medium enterprises because of this, the turnover limit and the investment limit which government has imposed on them. Now government has come up with a scheme. They have increased the investment limit by 2.5 times, and they've increased the turnover limit by 2 times. So now the current criteria to recognized as a small enterprises for all the industry is 25 crores in investment and 100 crores in turnover. So any industry which is having a turnover up to 100 crores and which is having investment up to 25 crores, it can be classified as a small enterprises. And so majority, because from this reclassification criteria, Government of India has been able to cover most of the industry in MSME scheme. Enhanced credit access, as I explained in the first point, as for the startup, enhanced credit guarantee. In the same manner, they also enhance the credit access for the medium, small, and MSME scheme companies. So what they have done, there is a enhanced credit access. Earlier, MSME can get the loan access from the collateral given by the government on behalf of government. They were able to get the loan up to 10 crores. Now they have increased the credit access up to 5 crores. Earlier, the MSME can get the loan from the bank where the government used to give the collateral on behalf of the medium, small, and micro enterprises. Now the government has increased that limit to 10 crores. So up to 10 crore, any MSME can get the loan from the bank where the collateral is given by the government of India. And one more thing is they have also started to issuing the credit cards for micro enterprises. Micro enterprises, to classify as a micro enterprises, your investment limit should be now from enhanced reclassification criteria. Now the investment limit is 2.5 crore in the new investment limit, and the new turnover is 10 crore. So any industry which is having a investment up to 2.5 crores and having a turnover up to 10 crores, it can be classified as micro enterprises. So when the micro enterprises start doing their business from scratch, there are
So are we in the same PPT or?
yeah, same PPT.
Okay.
So I'm explaining the second point. Hello.
Okay. Sure.
So yeah. So in this in enhanced credit, I was in the third point. Sorry, the micro enterprise credit cards. What they have done is any micro enterprises which is about to start their business, they might be not getting any loan access that easily. So Government of India has introduced something called credit card facilities given for the micro enterprises, where the limit is up to 5 lakhs to 10 lakhs. So they can use this credit card for the business purpose, and then they can do the payments. They can do the payments to the credit card where the amount is small, and the timely payment. The government has impose the buyers from who are buying from the micro enterprises to make the payment within 45 days, significantly improving the cash flows improving the cash flows. Earlier it was 90 days. Now they have come down to 45 days, so that the cash flow for the micro enterprises will be more. So coming up to the next slide, what is the best structure for startup and why? So there are different business structure.
Mr. Akshay, may I
Sure.
just interrupt and ask a question? I know you had mentioned, Bhavani, that we will have Q&A later, but these are very specific points to what you're discussing, and it makes sense to call it out right away, you know. So when you say collaterals by the government, that was one question with regard to the loan. What kind of collaterals the governments give? Okay, that is one. And second is when you say that the credit card has been issued and we have to make the payment within the due date of the credit card cycle, which is fair. But when you actually say on the other side that they're reducing the payment cycle from 90 days to 45 days, how does the government actually ensure when your vendors are not paying you, rather your customers are not paying you?
So there's doing an audit, we have something called credit hours analysis, where we do the credit analysis with whether the payment has been made for the creditors or not on the due within the 45 days or 90 days, where we will, in the balance sheet itself, we will classify the creditors under MSME and creditors under non-MSME. So while in the balance sheet, when the company is issuing their balance sheet, or the creditors, whoever the buyers who are buying from the MSME, they have to classify the debtors as a debtors who comes under MSME, debtors who doesn't cover under the MSME. So they have to mention the time limit within which they are making the payment. If they're making the payment above 90 days, an auditor, it's our responsibility to mention that in the notes to account, saying that this has been due for MSME for a particular more than 90 days. And whenever the payment has been not there in the 90 days, as per Income Tax Act, in the tax audit, we have to mention that the particular debtor has not been paid within 90 days. So that has to be, particular creditor has not been paid up to 90 days. So that has to be revised and has to be added to the income. So this is how the government can keep a track on payment dues for
Suppose
MSME.
this filing happens once a year, right? For example, we will file this 31st March return on the 30th of September, by the 30th of September. So in this whole year, we have struggled. So what you just mentioned is pertaining to the MSME who is under consideration. As say, suppose we are a MSME as well as a startup. We are a Kafakwa Innovations. So we manufacture coffee oil and allied sector, and we also have innovated and we have a patented process in this particular endeavor. So we classify ourselves at both. But say, suppose who is buying for us is a coffee grower, and he hasn't paid us for say 6 months. So when we file, the first and foremost is we are delayed in payment for 6 months. Then 6 months later, we are filing our return. How will the government ensure that they or any other person who is not paying us, they may not be MSME for that matter. How does the government ensure that we get payments from such people who we are selling? I was more concerned about that, not about that we are not making payments, because we are. Because most of the vendors do generate a sales order, and then once we make the payment, this is for our suppliers I'm talking, and once the material reaches us, they generate a formal invoice. But what happens is when you are working with a B2B, you build a trust and you keep sending things on credit period of say 30 days. But that 30 days doesn't remain 30 days, but becomes a 6 month, 9 months, whatever be the duration, you know. That was where I was seeking help as to how do we monitor, how does the government monitor those cases and enable the startups?
Got it. One thing I can guide you, or I can give you a suggestion. The supplier whom you're supplying, B2B, is he a GST registered person, or does he have a GST number, or is he filing a GST on a regular basis?
He should be filing, because we also have a GST. We give them the GST bill and we file the GST sale invoices on their name.
Got it. One thing you can do is you can tell him that if you make the payment within the 30 days, only then I will be uploading the GSTR invoice into my GSTR 1. Then only he'll be able to get the input tax credit for the purchase.
Oh, that's a brilliant idea, Mr. Jain. So maybe because see, this time we have already filed all our invoices and we have stopped doing business with them because they have been troubling us. But that is a good idea and a good lesson for B2Bs, because D2C doesn't happen like that. They pay upfront and then we send the material. But for B2Bs, we try to give long-term relationship benefits. So now that's a good idea. Maybe 1-2 months they don't pay, we don't file the GSTs and they don't get the credit.
And they will be losing almost 18% of the input tax credit.
Exactly. So, that's a brilliant idea. That was a great learning. Thank you so much, Mr. Jain.
It's okay. Anytime. So, coming up with the next point, many of the startups will be confused with which structure of company, which structure of business structure they need to follow while starting a startup. So there are basically 4 different types of structure. One is sole proprietorship, partnership, limited liability partnership, private limited company, and obviously in private limited company there is one more division called one-person company, and the public limited company, which is like for the startup it's not applicable, or not, it's very out of the reach. To become a public limited company, first you need to be a private limited company. Then there is a lot of process going on in that. So what we have come up with we have mentioned the benefits. We have classified the business structure based on their liability, taxation, and fundraising potential. So startup who is already whenever the person goes for a startup, assuming that if he doesn't have a proper funding, if he doesn't have a proper capital from with him to start a startup, then we always suggest him either to go to become a limited liability partnership firm, or to go for a private limited company. Because when the startup actually starts doing a business, or when the startup actually start getting the orders, and when the startup actually start on papers doing great, when they approach the venture capitalist firm or any private investor, first thing they'll ask is what is the benefit for them from your end. So if you are into a partnership or sole proprietor, I don't think so they'll be very much interested in giving an investment via debt. So they'll always look for a private limited company, or most of the stuff. And I'm not telling all the venture capitalists. Majority of the venture capitalists are interested in funding the startup, which is in the form of private limited company. And we have also, so private limited is the best option for the startup to get registered as, so that in the future it will help them to get the better investment from the venture capitalist. For example, you can take as a case study. It's a very popular case study, and most of you might be using that app also. So we have come up with a case study of Zomato Private Limited Company. So before the Zomato was a private limited company, and it was started in 2011. If I'm not wrong, in 2011 or 10 they started the company. And yeah, earlier they were having a business structure of private limited company. They went for a earlier the company was run based on the bootstrapping. After that, they went for a funding round where they got a good amount of funding from the venture capitalist. After the business started doing good, initially they got they went public, and now the Zomato Limited is a public limited company where they also have the shares available in the stock market. So this is the best example. See, any startup can become a Zomato. Any startup can become a Swiggy. Any startup can become an unicorn and achieve greater heights. You'll never know that. So before starting a company, before starting a startup, we should always dream big. I always suggest the startup to go for a private limited company. I know that there are a few compliances issues. There's compliance burden while getting into a private limited company is more compared to other form of business structure. But there is also added advantage. After running a business for 5 to 10 years, you wish to convert it into a private limited company. You will be the compliance charges will be even more higher after 10 years. So now it's now or never. So if you get the opportunity, if you're starting a company, or we always suggest the company, or if we always suggest a startup to go for a private limited company form. So there's a limited liability. These are the added advantage. There's a limited liability protection. Obviously, the liability first, promoter's liabilities. There's something called separate legal entity. The company is different. The promoter is different. So obviously, yeah.
Mr. Jain, there was another question with regard to the amount, because you said it's a private limited company which has benefits. We are registered as a private limited. We are just about a year and a half old. But when it comes to these announcements that government make on MSME loans, etc., where do we exactly go and apply? Because that is one point of question that we have. And there are also MSME units in multiple universities that we have affiliation with, in the sense that we are incubators in some, we are associated in terms of MOU in some. But where do we actually go and apply MSME? Because anywhere we go, they would ask for a 3 years financial statement. And for that matter, startups cannot apply. Startups eligibility continues to remain only up to 2 years from the formation of the company. And then MSMEs want a 3 years balance sheet. So it's a contradictory eligibility criteria in the first place. So first question is whether this 3 years is a valid question, valid eligibility, because you would know better the MSME loan structure. And the second is, where exactly do we go and apply? And also the other question I had asked earlier is what kind of collaterals the government give, because we literally don't have anything to give as collaterals other than our personal property or anything else, you know?
Got it. One thing you can do is we have mentioned our contact number in the below. You can contact us for the MSME assistance, because we also help the MSME to create the balance sheet for the next projected financials for the next 3 years. And to get registered as a MSME, there's a simple certificate called Udyam certificate. If you get the certificate, then you will be recognized as a registered MSME.
Sorry to interrupt you, Mr. Jain. We do have all of this. What I meant to say is, where do we go and apply if you have both? Like we are MSME registered, we are a startup, and we are a startup of 1.5 years old, but they ask for a 3 year financial statement, whereas we have only 1 year's audited report, and the next one will come in only September. So if we have to really apply for debt, where do we go and apply, and whether this 3 year criteria is still a valid criteria for application and sanction of these debts?
See, first thing is, if your company is only 1.5 year old, they will ask for 1 year actual financials, and for the next 2 years, they will be asking for a projected financials. We can talk to the banker who are asking for the 3 years actual financials. It doesn't make sense because your company is almost 1.5 year old. So 1 year actual financials and the 2 years projected financials, we can give it to them. And one more thing regarding the MSME loan. If you submit all the required documents to any bank, they will guide you. There is a credit criteria based on your financials, how the company is performing. Based on that performance, they will also tell you that this is the collateral-free loan which is available for your company based on your financials. So it all comes down to the banker who is looking after your documents. But the documents, as per my knowledge, the documents what required for us to submit for MSME loan is pretty simple. One is Udyam certificate they are asking for. If your GST registration, they'll ask for a GST registration. If your company, as you mentioned, is less than 3 years, or if you are into operation less than 3 years, and for the startup criteria, to be a recognized startup in India, you have to get the DPIT registration certificate. That is very simple, where the criteria is very simple. You have to be 10 years younger. Your company should not be 10 years older. So up to 10 years, your company will be still recognized as a startup, and your turnover should be less than 100 crores. That's one of the criteria to be recognized startup in India. You can also submit that DPIT certificate to the bank to say that you are still a recognized startup. So one more, another document they'll be asking for a 3 years projected, 3 years financials, out of which 1 year we can give the actual financials, and next 2 years we can give the projected financials. Based on, after analyzing your financial statements, the banker will tell you that this is the collateral-free loan which you are eligible, which you can access for.
Sure.
We can definitely help you out.
This is in any nationalized bank, right?
Any nationalized bank. You can drop a message for our contact number. We'll definitely help you to get access through the MSME loan.
Sure.
You can also talk to the banker on behalf of you. That's not an issue.
Thank you so much, Mr. Jain. Thank you for answering this. Thank you very much.
Sure. It's okay. So these are the benefits. So as I was explaining before, there's a separate legal entity concept that the company is different and the private and the investor is different, which protects the investor's personal asset from the unlimited liability which a private limited company can face when they're into trouble. So lower tax rates. This will be explained when we are explaining the glimpse of income tax rates. So to make it very simple and to give a proper analysis, we always ask you to come to us, explain your idea and what form of investment you're looking for. Based on that, we can always suggest you which type of business structure you can go for. So this is on a general basis. We are telling you that private limited company is the best structure for a startup, but it also depends on from case to case basis. So next thing is a glimpse of income tax and its exemption for startup. So in this section, we'll be discussing about the few following topics. One is income tax rate, income tax deductions, and benefit of depreciation. And I have taken a liberty and going off a concept which is applicable for the private limited company, because most of the income tax deductions and benefit of depreciation, the benefit of depreciation is allowable for partnership as well as limited liability firm, limited liability partnership as well as for company, saying that if you are getting your books of accounts audited. But income tax rate and income tax deductions, some of the deductions and some of the income tax rate and some income tax deductions, which has been explained in this section, is purely for a private limited company. So income tax rate. So income tax rate for a domestic company up to, if the turnover is less than 400 crores, then the tax rate is 25% and surcharge is 7%. For domestic company, for more than 400 crores, the tax rate is 30%, 7%. So you can always get this data from the internet. So it's of no use of me explaining all of this for you. But I want to tell you one thing. For a startup which is recently formed, I'll link this tax rate with the income tax deductions so that I can tell you the best tax planning for a startup. So these are the income tax deductions and exemption for a startup. First section is AIC-CCRI-CED. This is the section which in this section, government has come up with an amendment in the budget 2025, where they have extended the time limit for 5 years. Earlier, to get a benefit of AIC-CCRI-CED deduction, the company should be incorporated in between company must be incorporated in between the 1st of April 2016 to 1st of April 2025. So any company incorporated in between the 1st of April 2016 to 1st of April 2025 only were allowed to get this exemption. Now the government has extended this time limit from 1st of April 2025 to another 5 years. That is 1st of April 2030. So any company incorporated between 1st of April 2016 to 1st of April 2030 can avail this exemption. That's a brilliant strategy, and that's one of the major benefit which has been given to a startup. Because I'll explain you what the benefit startup can get through AIC-CCRI-CED. Through AIC-CCRI-CED, the startup for first 3 years of their incorporation can get the 100% tax exemption for whatever the turnover or whatever the profit they're making for the first 3 years. They will not be liable to pay any tax. So to get this benefit, few simple criteria the government has come up with. One thing is you have to be incorporated between 1st of April 2016, and you cannot be incorporated before 1st of April 2016. You have to be incorporated 1st of April 2016 to 1st of April 2030. Obviously, the 10 years, up to 10 years, for the first 3 consecutive years, you can get this benefit. And one more thing, you have to be private limited or LLP, and turnover should be less than 100 crores. And you have to get the DPIIT recognition recognized startup. Above the DPIIT recognized startup, we provide the DPIIT registration service as well. You can contact us for that. So second thing is for AIC, see, if you opt for, if I go back, if you opt for any of the new domestic manufacturing company, which is taxable at the 15%, or company opting for section 115 BBA, that is 22%. If any private limited company opt for these 2 sections, which is very attractive for any startup because the tax rate is very low, 15% as well as 22%. But AIC specifically tells that if a company opts for any of these 2, then it won't be getting benefit of AIC. So what we suggest all the startup is, what we plan for every startup who is onboarded to our company, that opt for regular, that is less than 400 crores, that is 25% at for the first 3 years, so that you can get the exemption under AIC. Because switching from the first section to next section is allowable. Once you select for the 115 BAB or 115 BAA, you cannot switch again back to the old section. So first you can opt for the 25% and get the exemption under section 80 IAC. Then you can switch back to a 115 BAA if you are a non-manufacturing company, or 115 BAB if you are a manufacturing company. And another section is 80JAA. Due to this one, these 2 exemptions are the most benefit for the startup. So this 80JAA encourages to startups to create employment. So what this specific section tells is, if any company comes up with any company hires a new employer, so any company hires a new employee, then 30% additional deduction on the new employee salary for 3 years. So what this section specifically tells is, any company, for example, 100% exemption, if a company hires 10 additional employees in the current quarter, and they're paying some salary for him. So 30% of additional deduction on the new, however, the salary expenses will be claimed in your P&L as a salary expenses. 30% additional for whatever the salary you have paid for those employees can be claimed through this section. Obviously, there are certain documents which need to be submitted. There is a auditor report saying that they have added few new employees. There has been an increase in employment in this particular company. The auditor has to give a report to the government. After uploading that report, we'll be getting this exemption. 100% deduction on in-house R&D. Obviously, there's 100% even whatever the expenses you have done on your R&D can be claimed through this. And no tax on capital gain from the venture capital, any venture capitalist who have been funded for AFI 1 category 1, alternative investment fund category 1, whatever the gains they're getting, there is no tax for them. So it encourages venture capitalists to invest on a startup. And obviously there's a capital gain exemption also. For example, I'm a startup founder. Unfortunately, I don't have enough fund to run my startup. So what I do is I have a house property. I'll sell that house property, and after selling that house property, what I'll do, whatever the gains I get from the house property, I'll invest that gains into my startup. So I'll invest that gains into my startup. So whatever the capital gain exemption is, up to 50% of shares hold or investment for business asset will be exempted as a capital gain. So next point is, so these are the major benefit these are the major deductions available for startup. Just a minute. Sorry for the interruption. My laptop battery was draining, so I connected to the charger. So yeah, the second point which I was about to explain you is third point actually, the benefit of depreciation. So many startups, see, this is the major benefit of getting your books of accounts audited. Whenever you get your books of accounts audited, you will also get the benefit of depreciation, where you can claim depreciation on the plant and machinery, depreciation on the computer. There are some accelerated depreciation for specific assets. As you can see in the presentation, there's an accelerated depreciation benefit which is given for specific assets, energy efficient equipment, as well as popular pollution control devices. So depreciation is one thing where many of the startup founders won't consider it before forming a company, because that's something which is a very commerce thing. Few of us will be knowing. I mean, most of the founders will be knowing there's a tear and wear whenever they buy the machineries. But you can take the advantage of the tear and wear of your machineries in income tax as well. So what we suggest, what we always suggest, even if a startup is a sole proprietor or a partnership, we always suggest them to get their books of accounts audited. When they get their books of accounts audited, only then they can get the benefit of depreciation. So as you can see, the normal depreciation is 15% general rate for the machinery, equipment, office furniture, and there's accelerated depreciation as 40% for specific assets, energy. Earlier it was 50%, and 60% was there for the computers as well. So these are the depreciation benefits. These are the benefits which the company or the startup can get when they opt to get their books of accounts audited, as well as for a startup which is into a sole proprietor partnership. If they get their books of accounts audited, only then they can get the depreciation benefit. Next thing is glimpse of GST. GST is something which is rocket science for many of the startups, and many of the startups doesn't get the idea of why even there is obviously registration turnover. So there is something which confuse each and every individuals regarding a GST. So whether I need to get registered under GST, why I should get registered under GST, what are the benefits of after getting under GST? So that's what we are discussing in the glimpse of GST. So why? First question arises for every startup. I know that many of you are already running your business. You have some idea about why we need to get registered under GST, and what is the turnover limit to get registered under GST. If you don't get registered under GST, what are the limitations for you? What are the benefits which you are going to lose? So I have kept it very simple. See, basic thing is, if your business is providing a service, then your turnover limit is 20 lakhs. Up to 20 lakhs, you do not require to get the GST registration, but voluntarily also you can get your GST registration. I'll tell you why many of them, even though their turnover is not crossing 20 lakhs, why they get the registration under GST. And for supplier of goods or manufacturer of goods, the turnover limit is 40 lakhs. Interstate suppliers, see, this is where the point is. If you don't get registered under GST, then you are limited to sell your goods only within the state. That means if I'm into a coffee trading business and my turnover is less than 40 lakhs, then I won't be, and I think that I'll not apply for a GST. Then I'll not be able to sell my goods outside Karnataka because of the limitation which I'm facing for not getting the GST registration. Once you get the GST registration, obviously this is compulsory. Whoever is doing the interstate suppliers, irrespective of their turnover, they need to get the GST registered. E-commerce sellers, if we're selling via Amazon, Flipkart, Shopify, I mean, it's a very good platform for any retail traders, because e-commerce has greater reach than the traditional method of selling. And the casual taxpayers occasionally they transaction in different states. The CTP casual taxpayer, best example for a casual taxpayers are you might be knowing the circus, the people who are conducting exhibitions, all those things in a different locality. They are called as casual taxpayers because they don't have a proper registered place of doing a business. They'll be moving around in and there to have the business in a different localities. They won't be having a proper registered place. So the casual taxable persons who is conducting a business in different cities at a different point of time, they need to get registered compulsorily. And input service distributors. So this applies for the, let's take an example. I'm a startup who is having a multiple branches. My head office is in Mumbai, and I have different branches in Karnataka, Kerala, Goa, everywhere. But the head office is paying for the main services which has been received by different branches. So we call it inward service distributors. What the government has come up with a scheme that earlier it was optional. If head office can distribute the inputs to which has been used, for example, I have done an advertisement for my company, and this advertisement benefit is this advertisement expense has been benefited to various branches of my company. Let's take Karnataka, Kerala, Goa, and my main branch, Mumbai. These 4 branches has also been benefited from this advertised expenses. Earlier, what used to happen, whatever the GST is, head office is paying for this advertisement expenses. Only head office was claiming this advertisement expenses, and these branches, these other branches, like Karnataka, Kerala, Goa, were not able to get the GST input tax credit of their part. So now the government has come up with a scheme saying that based on the turnover of each branches, the ITC has to be distributed for all the branches if the common expenses has been incurred by the head office. So that's if you are input service distributor, if you're IST, then you have to take the GST registration. Reverse charge mechanism, you might be knowing if you are paying lawyer fees, or if there are few cases where the GST has to pay the reverse charge mechanism. So if you are paying if you are required to pay GST under reverse charge mechanism, instead of supplier, the buyer has to pay the reverse charge mechanism. In few of the cases, then you have to compulsorily get the GST registration. Non-resident taxable person, NRTP, the foreign business supplying goods or services in India, they also required to get the GST compulsory registered. These are the basic things who need to get registered. These are the benefits of getting registered. You know, the benefit of getting registered, it's vast. I can see, I'm not advertising my service, but there's a lot of benefit for the startup as well if they get GST registered. As I mentioned for one of our participants, that while going for MSME loan, they'll ask for a Udyam certificate. Sometimes they'll also ask for a GST registration certificate. And if you want to scale up your business, obviously you need to expand you need to start selling your goods to other states as well. So when you start selling your goods to other states, then you will have to get your GST registered. It's like now or never. You might think that I won't be selling any goods to other states. I have only customers in and around my locality. Then you, in the future, when you need to get the GST registration, the registration cost obviously will be higher than today. You might be knowing that because of the inflation rate. And the government, I have never seen the compliances charges getting reduced in another 2 or 3 years. There has always been a hike in compliances fees earlier to today, and today to tomorrow also there will be a major increase. And input tax credit, if you are registered under the GST regular scheme, you might be knowing, after if you buy a plant and machinery, you will be paying 18% GST for everything. The major for all the HSN code, GST rate is 18%. So whenever you buy the goods, you'll be paying 18% extra. If you are not GST regular taxpayer, if you're not GST, if you're not registered as GST under regular scheme, that 18% is like expenses which you cannot be claimed. You'll be end up increasing your product price, and you'll indirectly try to charge the GST tax, whatever you paid for the import, from your customer, and your competitor who is already registered under GST, who is eligible to claim the ITC, will charge less price than you, because your product is includes of raw material charges, GST, ITC, GST tax which you have paid, which is where you cannot claim the refund, as well as for your all other indirect expenses. But your competitor's final price will be input raw material charges plus your profit margin. So obviously his price will be lesser than you, and the customer will tend to go over there. So to reduce that, if you get the GST registration under regular scheme, where the compliances fees is very less to file a return, where the compliance is now, the government has also come up with a quarterly filing scheme. Earlier, if you are registered under regular, you have to file the GST every month. Now they have come up with every 3 months once. Also, the regular GST scheme holder also can file once in 3 months. Access to wider market, as I mentioned. Any GST, if you get registered under GST, you can always have an access to all over India, because you are GST registered. I can also do the interstate selling also. Avoidance of penalties. See, there are people whose actually turnover on paper is not more than 40 lakhs. If I am not wrong, every one of you might have come up with an article which was posted in Times of India, I guess. There was one Pani Puri seller in Tamil Nadu who got an UPI transaction of around 55 lakhs. And the GST department has sent him a notice that you have not registered under GST, and your turnover has crossed 55 lakhs in so and so month. From so and so month till now, you have not registered under GST, and you're liable to pay this much of GST tax along with the interest. See, GST department and income tax has eyes on everyone, no matter what business. And the UPI, thanks to UPI, it has made the job even more easier. So you might be knowing when your turnover is getting crossed. You cannot keep check on that. So before starting a business, the compliance fees is very less. I always suggest that irrespective whether your turnover is more or less, get your company registered on GST or your firm under registered on GST, so that you'll be avoiding the huge penalties which you will be getting to know only after receiving the notice. Seamless compliance and transparency. See, once you get the GST registered, you are like, once you get the GST registered and once you're filing all your returns on time, and once you're getting all the proper input tax credit, once you're paying your income tax and GST on time, that's the peaceful sleep what you get at the night is priceless. So you cannot pay the cost, or you cannot pay the price for that. Once you get the notice from GST or income tax, then no matter what's the amount they are demanding, it will not give you sleepless. It will give you a more sleepless night. So that's the added advantage. If you get your GST registered, or if you are complying all the compliances on time, you can run your business very smoothly. And one more thing is, whenever you go for a funding, venture capitalists will also see both aspects, financial and non-financial. Non-financial comes with are you complying with the labor laws? Are you complying with the income tax laws? Are you complying with the GST laws? If you are very good at your business, and if you're not good at maintaining your non-financial compliance as non-financial sectors as well, then the investors will think twice to invest in your company. So this is our contact number, and this is our email address. If you have any doubt regarding how to get the registered under MSME and how to get the benefit of TPIT, how to get the benefit of any particular section, AIC, AIC-CCRI-CED, or if you have any doubt regarding which structure you need to opt for, or if you have any, like one of our participant asked, like her supplier is not paying, her buyer is not paying, her supplier is not paying her dues on time, like her customer is not paying dues on time. In B2B transaction happens many times because we tend to retain the client on, so we always gives them on, we always sell our product on a credit basis. If you face any of the issues regarding credit taxes, regarding investment or anything, you can always drop a message, or you can always call us. You can always drop an email, or you can drop by to our office. We'll always help. We are always glad to help you. So that's all from my side. I hope it was an interactive session. So Vinay will take up the Q&A, and if you have any doubt, or if you are in require of any service, you know where to contact us. So yeah, thank you. Sure. I'll share the presentation. Yeah, sure. I'll share the presentation. I'll share it to the host of this meeting, so that you can share it to everyone, right? Hello.
I had to ask a question that this loan interest rate, like, I mean, can you just give high level lights on that?
Sure. What happens is, when the interest rate at present for housing loan and for car loan, the interest rates are quite high. And for the business loan, as on now, I guess it's around 8 to 10%, if I'm not wrong. And if you go for MSME's collateral, the loan benefit, they have some scheme via Prime Minister, this one, under Prime Minister scheme. So what they have done is, they also give you the subsidy regarding that. If you are applying a loan for so and so amount, some amount of subsidy is also given for you. And the interest rate varies from around 6 to 7% based on the bank, nationalized bank, or from where you are getting the loan. So if you have if you are already planning to go for a loan, or if you are already have a banker with whom you are already having a discussion, you can include us in the discussion as well. We can do the helpful for you regarding getting those benefit.
And just to add upon Akshay's point, the interest rates for all these MSME loans is basically depends on, rather than home loan, like something like that where the interest rate is fixed. But to me, one of the good part is that it depends on how is your revenue generation and how well are you able to repay the loan to the bank. So once we analyze the statements, right? So once we have a discussion with the bank people, nationalized bank, they will fix the rate. for sure it is at a lesser rate interest rate than a business loan. Again, it depends on nationalized banks how we set up the rates.
Okay, thank you.
Bhavani? Yeah. Yes.
Yeah, thank you. Thank you so much.
Hey, and team, morning. This is Balu here. I have two questions. One is
Sure,
about,
sir,
One is about, irrespective of the volume of business transactions, to have a GST registration on account of so many advantages, whatever you have mentioned. Whether filing the GST return, however, it is relaxed from a month to a quarterly basis, even though the turnover is not up to the mark or even big or something, then also it becomes mandatory that just because he has registered a GST business holder, he needs to
Yes, sir.
file his return on a quarterly
Yes,
basis,
sir. What
however small or
happens
big
is,
the business. Yeah.
sure. Vinay, will you take on this or shall I take?
Yes. I'll take on this. My voice is audible,
Sure.
right? My voice is audible.
Yeah.
Yes, sir. Hi, Balu, sir. Hi. The thing is, now, once you get GST registered, whether you are filing your GST return monthly or whether you are doing the quarterly filing, it mandates you to file your GSTR1. GSTR1 is basically to show up what amount of sales you have made. So that the purchaser, from the person who has purchased the goods from you, should take input, right? He should get input. So whether you are a quarterly filer or a monthly filer, you have to file your GST returns. That's a mandatory.
Okay, I got it.
Yes.
Second
Balu.
question of mine is about both to Vinay and Akshay. Is
Please,
that
please.
are you also extending a service towards putting across some of the MSMEs to a circle of banks and NBFCs to get the funding part?
Definitely. See,
Yes, Vinay, your voice is
who's a
breaking.
funding partner and apart from Akshay,
Hello.
please take up this question. Please.
Vinay,
Akshay, please take up this question.
Vinay, better you can mute your video. Yeah, you can mute your video, rather the network is not supporting. You can continue on audio or you can leave it over to Akshay.
Akshay, can you please take this up?
Sure. So for your answer, sir, we have we know few of the bank managers who are also ready to fund for the MSME based on obviously it comes down to what the documentation you are having and how your financial looks on paper. Also, I'd like to introduce that we are also coming up with our own in-house venture capitalist firm, where our founding partner and we are, for some of our angel investors are the designated partners. We are coming up with the LLP. We are going for LLP structure. So what we do is we help the company for first initially, because if a startup has a very good idea and if it is in a ideation stage or a pre-seed stage, we'll see how the company is doing. And whether if the financials look good, like for example, if the projected to pitch, we'll prepare a pitch deck for you, investment deck for you, where we'll prepare the 3-year projected financials, and we also get you in touch with these bankers as well as the venture capitalist firm. Venture capitalist who we have an in-house venture capitalist firm. We are coming up with the concept. We are working towards that because we have the few of the angel investors who are looking to invest in this particular sector. So if your idea looks good and if your project reports also looks good, we'll be a bridge between you. We'll be connecting bridge between you and the venture capitalist. Obviously, we can't. We'll pitch your idea to them. We'll also help you to pitch your idea to them. Pitching your idea will be from your end. So we'll help you getting those documents get ready. So yeah, we'll help you in getting the funds as well. So we'll help you in that.
My question goes to the next level, that this is as a facility you are helping the MSMEs to, or is it a part of your portfolio to refer to banks and NBFCs on a payout to you on that basis?
No, sir. See, because there are a few documents which are to be prepared from our end. We'll help you to get in touch with them. So getting a loan from them, we'll obviously refer them. There's no payout from, we only charge for the preparation of those documents. So yeah, there is no percentage wise, we don't charge.
Just to add upon Akshay, Balu sir, as per our ethics, we won't be charging anything as such. Only the professional fees will be charged for preparation of those investment decks and projected balance sheets. That's it. And it's up to you and the venture capitalist or a bank manager.
That's great. That's nice of you. And probably I do have some one-to-one discussion with you in the days to come very soon at Sadashiv Nagar. Maybe I will just talk more on that. Thanks for.
Sure, sir. Sure, sir. Looking forward to meet you.
Thank you so much. Thank you.
Thank you.
The given number is of whom? 97405?
So it's our
Vinay.
office number.
It's our office
It's
number.
our office number. Yeah, please do call. I'll be most of the time I'll be picking up the call because now we are giving these webinars, right? So that's why I'll be picking up the call. Please do call to that number, sir.
Great. Thank you.
Thank you, sir. Thank you.
Do we have any more questions, dear participants?
Hi, sir. Hi, Narendra. Yes, sure, sir. Some of them are staying in this one. Hi, sir. Yes, tell me, sir.
Hi, Vinay. This is Narendra here.
Yes,
Hello,
sir. Yes, sir.
Hi, sir.
Yes, sir. Good afternoon, sir. Yes, sir.
Good afternoon. Good afternoon. This is Narendra here. So, yeah, I'm from Udyami Solutions. So what basically we do is we stand as a bridge between the entrepreneurs, maybe an existing or aspiring entrepreneur, and banks and the government schemes and subsidies. We give complete handholding starting from their project report to loan disbursement plus subsidy availment. So this is what the service we do.
Okay, sir.
So
Great.
it would be great we can get connected in the back end so that how we can collaborate and work together.
Sure, sir. Sure, sir. I remember I have met you, sir, in the coffee board during the
Amazing,
export
amazing.
software. You have come to the conference as well. I remember meeting you. So you definitely will get in touch with you. We'll have a
Yeah,
further
sure.
discussion on that. Sure, sir. Sure.
I just just thought of saying hi to you guys. That's it.
Nice of you, sir. Thank you, sir. Thank you.
So sweet of
Beyond
you,
your
thank you.
hi, Narendra Kumar, if it is okay for the benefit of all, if you can also spell your number so that anybody can be in touch
Yeah,
with you
sure.
because you're part of the Udyam team or something like.
Yeah. So my number is 9036. I'll just put it in the chat box also.
9036
440914.
Based at Bangalore only, right?
Yeah, we are based at Bangalore.
Great, thanks.
Very good afternoon, everyone. Do we have any more questions?
Yeah.
Roshan sir, do you want to ask anything? Your mic is unmuted.
Sorry, nothing else.
Okay.
I'll just take 1 minute. I just want to I just want to our founder Shabri, so who is herself and everything, and I just want 1 minute where she just introduces about herself.
Hi everyone, can you hear me?
Yeah.
Yes, ma'am. Yes.
Yeah.
Loud and clear.
It's very nice to have Akshay, and Akshay presented very well. I was just listening to him. Hope he's covered all the points participants have in their mind. And if not, please get in touch with personally. If you want to speak out, ask any doubts. We are here to serve you. We are into service, financial service aspects, so we can help you in any aspects. So you can get in touch with Akshay or Vinay or me in the Sadashiv Nagar office. We are right away, 24/7 we are available. So don't hesitate to call us. We are there to help only for startups, especially because we know very well that how difficult it is a financial part to go through. And we know very well that you're very good at your own subject, not in financial part. That's why we are here to help you all. Thank you very much. Get in touch with us whenever you feel like.
Yeah.
Have a good day.
Yes. Thank you so much.
Thank you.
And just to add upon when we met, just to add upon ma'am's words. So when we met Praveen sir, the whole thing was we discussed about how to make startup grow in a better way. That's when we meet on the financial aspect. They'll be very good at their product or services, but somewhere they'll be not aware of compliances. So this I thank Praveen sir also. He is not here. Praveen sir and Ashwik, where now we are conducting webinars to educate all the entrepreneurs. So I hope you all liked our presentation. If you have any doubt, please don't hesitate. Just drop a message or a mail. Our team will definitely get in touch with you. Yeah, that's all from my side. And I thank Akshay and I thank the coffee board. And yeah, that's from my side.
Thanks
and all
a
the
lot.
participants
Thanks a
for
lot.
participation.
Yeah. Thanks a lot, everyone. You had a good time with us, I believe, and have a good day. Thank you to Atal Incubation Center team who gave us the time and support technically. And thanks to Praveen sir who made us to give this webinar to everyone, which is very useful, I hope.
Yes, ma'am. Thank you so much. Thank you for the entire team who presented today. And now I shall proceed with the formal vote of thanks. A very good afternoon, everyone. We extend our heartfelt thanks to Ms. Shabri KJ, founder of TaxWise Consultants, Mr. H.K. Vinay Karlagere, partner of TaxWise Consultants, and Mr. Akshay Raj R. Jain for the insightful session on Market Access webinar series. On behalf of AIC-CCRI-CED, we appreciate your expertise and enthusiasm on the topic navigating startup compliance and regulatory landscape. The key takeaways from the recent union budget. Your valuable contributions are greatly appreciated and we look forward to future collaborations. A special thanks to all the participants for your active engagement and insightful questions. Thank you all.